This 5-minute Heikin Ashi strategy combines one of the most popular trading indicators and pure Heikin Ashi price action, allowing you to spot high-quality trades with an insanely high win rate. Not knowing these simple steps can potentially put you at a disadvantage. You can use this incredibly simple and powerful strategy for different asset classes whenever you trade forex, crypto, options, or stocks. During this video, we also will show you how you can get access to our top-notch private indicator known as quantcapitalsuppport. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell so that you can keep up to date with new content releases. One of the biggest traders' mistake is relying on indicators on their own without combining them with price action. In this episode, we will show you the ultimate combination of the relative strength index and Heikin Ashi price action, which can result in over 90% win rate. Also guys, if you want to learn Heikin Ashi basics more in depth along with another profitable Heikin Ashi day trading strategy, make sure to watch our previous video about Heikin Ashi because we are not going to cover these concepts here, so the link will be in the description as well. At this point, let's discuss all steps required for this strategy. So step 1, you should add the RSI indicator to your chart. Go to the indicators tab, type RSI and choose the first point from the list. In this particular case, make sure that you have an upgraded version of the indicator with a moving average. All settings should remain unchanged. First of all, we should wait for the RSI to be oversold or overbought. This will act for us as an early trigger event. However, the RSI oversold or overbought conditions do not mean 100% trend reversal. For this reason, we should look for the RSI to be oversold or overbought right at the key support or resistance levels established on the higher time frames. Since it is an aggressive scalping strategy, you can establish key levels on the 1-hour time frame, 2-hour time frame, or even a 4-hour time frame as well. Support or resistance established on the higher time frame has more power compared to lower time frame levels. This means that we have a higher probability for the price to pull back right from these levels on the 5-minute time frame. So our second step is related to establishing key support and resistance areas in the chart. Once we spot the RSI indicators oversold or overbought condition at a key level, we want to see the RSI line break out through the simple moving average. The RSI line should break above the SMA to give us a bullish bias, and the RSI line should break below the SMA to give us a bearish bias. So our trigger event for the trade entry has been completed. Next, we are going to discuss the confirmation event based on the Heikin Ashi price action, which will allow us to filter out a lot of losing trades. So if you are enjoying the video, leave a like on it. Also, let us know your questions and thoughts below or topics you want us to cover, as we always take your comments into consideration and love hearing from you all. Finally, let's discuss the last step. We need to confirm our previously established setups through the Heikin Ashi price action. In a bullish case, we should wait for 2 Heikin Ashi candles with no wicks along the bottom, and it is important to note that the body of the second candle should be greater than the body of the previous one. From a price action standpoint, it will mean for us a clear momentum gain, thus increasing our chances to get a profitable trade. When it comes to bearish case, we should spot 2 Heikin Ashi candles with no wicks along the top, and the body of the second candle should be bigger to confirm a momentum gain. For now, let's move to the next part of the video and backtest this strategy by looking at some market examples. During this part, we will discuss risk management concepts and some basic exceptions as well. So here's pound yen 5-minute time frame. As you can see, we have already established key levels from the higher time frames to do not waste your time. If you want to learn more about how to properly spot effective support and resistance levels, make sure to join Quant Capital Education, so the link will be in the description as well. At this point, let's start our backtesting process. As you can see right here, the price moves lower and approaches the support level. At this point, the RSI is oversold as well. Now we should wait for the RSI line to break above the simple moving average. And here it is, so our trigger event is fully confirmed. Moving on, we want to see a momentum gain through Heikin Ashi candlesticks, and here it is as well. As you can see, we have 2 perfect green candles with no wicks along the bottom. And more importantly, the body of the follow-up candle is bigger, confirming a momentum gain. So we can enter the trade right on the next candle with a stop loss right below the previous low while initially targeting 1-to-1 risk to reward. Once the price hits our initial take profit, you need to close half position and move stop loss to break even with the next target of 2-for-1 risk to reward. Risk per trade should not exceed 1% of your account. So this is the basic risk management rules for this strategy. If you want to learn more advanced risk management concepts, which are also adjusted depending on your account size, make sure to join QuantCap Education. So with that being said, moving on. So as you can see, the price moves up and approaches the key resistance on its way. At this point, the RSI is also our bot right here. Next, we should wait for the RSI line to drop below the SMA, and here it is. So now our trigger event is fully confirmed. At this point, we need to spot a momentum gain setup through Heikin Ashi candlesticks, and as you can see, here it is. So we can enter the trade right on the next candle, placing our stop loss above the previous high and initially targeting 1-to-1 risk to reward. And as you can see, our take profit was easily hit. So with this in mind, let's move on and find the next setup. So as you can see, the RSI is our bot right here, but this setup doesn't occur at a key resistance, which means that this trade has a very low probability for success. So at this point, we should skip this trade. However, even if you tried to enter, as you can see, only right here, during this drastic drop, we received a momentum gain confirmation through Heikin Ashi price action. However, at this point, the RSI is now oversold, meaning that we should start looking for long trades at the moment. And we can see that the RSI line breaks above the SMA. So at the moment, we should wait for Heikin Ashi momentum gain price action. And here it is. As you can see, we have two green candles with no wicks along the bottom, and the body of the second candle is greater than the previous one. So with that being said, we should enter the trade long on the follow-up candle with a stop loss below the previous low right here, initially targeting 1-to-1, and as you can see, our take profit was hit, and after we trail our stop loss to break even, the price easily proceeded to second take profit, giving for us 2-for-1 risk to reward right here. So with that being said, let's move on. But before we continue, if you want to enhance your trading experience, you need a high quality algorithm that combines complex trading processes to tell you when to buy and when to sell. So if you want to access our own private indicator QuantAlgo to get results fast, all links will be in the description and in the comment section below as well. Without this algo, will put you at a disadvantage. So as you can see, the RSI is overbought right here, so now we should wait for the RSI line to drop below the SMA. And here it is. So our next step is to confirm our trigger event through Heikin Ashi price action. And as you can see right here, we can see a perfect momentum gain setup because the body of the second candle is bigger than the body of the previous candle. And also we have no wicks along the top. So all our criteria are satisfied. So we enter the trade right here with a stop loss right above the previous high and initially targeting 1-to-1. And as you can see, our take profit was easily hit. So we have another setup right here. The RSI is overbought, and as you can see, the RSI line then dropped below the SMA. However, at this point, we failed to receive a Heikin Ashi confirmation, which is why we should skip this trade. Only on this drastic drop, we receive a Heikin Ashi momentum confirmation. But as you can see, at this point the RSI is oversold, which is why we should start to look for the long trades. So with that being said, as you can see right here, the RSI line breaks above the SMA. So we should enter the trade long on the follow-up candle. So we enter the trade right here, with a stop loss right below the previous low, right here, and targeting 1-to-1. And as you can see, our take profit was easily hit. However, we have multiple trading setups within that range, so let's consider them in depth as well. So as you can see right here, the RSI is oversold and the price is located at a key support level as well. So then the RSI line breaks above the SMA. And more importantly, we have a perfect Heikin Ashi price action, so we should enter the trade on the follow-up candle. And as you can see, our take profit was easily hit. And even after we trailed our stop loss to break even, the price proceeded up, giving us a perfect 2-for-1 as well. The RSI is oversold right here, and the price is floating near the key resistance level, So then we can see that the RSI drops below the SMA line right here, and moving on, we should wait for a Heikin Ashi price action. And here it is, we enter the trade short right on the next candle, and as you can see, our take profit was easily hit. The RSI is overbought. At this point, we should wait for the RSI line to drop below the SMA. And here it is, so we should enter the trade short right on the next candle, and as you can see, our take profit was easily hit. Now let's take a look at our results. So during this small backtesting process, we considered 11 trade setups, 10 of which were profitable, and hit at least first take profit, which results in a 91% win rate. Of course, the win rate is not a constant figure and it will float depending on the market conditions and many other external factors. However, if you stick with the previously mentioned rules, you will be able to make solid profits. Also, our total net amount of pips made from the 11 trades stood at 246. Which is pretty good for this type of strategy. Finally, if you applied our suggested risk management rules for this strategy, your account should grow by 8.5%, which is fine as well. So if you're enjoying the video, leave a like on it and subscribe to our channel, as it always motivates us to release new content more often. So thanks for your time, and I'll see you in the next video.